We are officially underway here in the month of June, which means it is time to supply you with all of the evidence in the world to get started on a dividend investing journey of your own as I run through all of the dividend stocks that personally paid me out during the month of May. And moreover, have you update the dividend tracker with me just so you can see the sheer power of being a dividend investor. So, are you ready? Now, before we dive into all the dividend payments, if you're new here, I want you to stick around for the duration of the whole video because during these monthly dividend updates, I actually take a bit of a different approach from my fellow YouTubers. Whereas I not only share my dividend income with you all stock by stock, but I divvy out my 2 cents on each of these stocks, whether they're a buy right now or what exactly I plan on doing with them, just in case any of you actually want to follow suit with similar investment moves. Then come the end of the video, we actually total up all the dividend income together and I key you into my progress as a dividend investor by way of having you update my dividend tracker with me. With that, I want to go ahead and actually just quickly update you with where I stand right now within my brokerage account, as we've come quite a long ways by almost $10,000 up from where I was about a month ago. Now, we have $165,519.07 in the account. And in addition, I want you to have a clear picture of my portfolio. And I thought this would just be interesting to share with you all as my portfolio analysis stands right now. I'm basically all domestic with the vast majority of my holdings, roughly 83% of them in the large caps, which means safety in my eyes, as I tend to stray away from smaller, riskier bets. But at the same time, I am heavier here in growth than I am in value, 57% to 39% respectively. As we scroll down here, we can see that I'm a fan of healthcare stocks and technology stocks, whereas about 15% of my portfolio is in healthcare, and then I have about 45.6% in technology. Now, I share all of that because I just want you to understand that our portfolios may look different given my investment timeline and your investment timeline or varying risk appetites, but I remain a dividend investor and one that seeks out more dividend growth right now than actually higher yields. So with all of that in mind, let me share the income that I'm bringing in from such a portfolio, kicking us off with our very first dividend stock payment of the month. We had Darden Restaurants, ticker symbol DRI. Now, right off the bat, I do want to key you into the fact that I just scored 8 more shares the other day and strongly believe that Darden is in fact a buy at this point in time for the long-term investor. But let me explain. When it comes to Darden, it's a restaurant operator with some of the most popular restaurant brands operating underneath its belt. Talking about the Olive Garden, Longhorn Steakhouse, or their fancier gems like Eddie V's Seafood and the Capitol Grill. But now what we really need to come to understand as investors is our macro environment. Whereas right now, consumers are certainly feeling the pinch and totally backing away from spending at, well, all restaurants and fast food joints alike. Now, they're all hit by higher costs of labor and materials, meaning a double whammy impacting all these balance sheets for restaurants, and therefore we get Darden trading for just $151 per share at a P/E ratio of 17.6. Now, that's certainly not the first slump that Darden's experienced since COVID under these conditions, and just look how it's actually soared as Darden is up by over 345% on the decade. In addition, analysts are in line with my bullish outlook here, forecasting over 18% worth of share price appreciation from here, rising to $178.93 per share. However, in clicking into the insider activity, we see overall selling going on from Darden insiders to hedge funds, meaning we could certainly see more downside, at least an indication of downside coming. But if that is the case, I would certainly be only buying more shares myself. As for my dividend income, I got paid from my 5 shares, though I now own 13 total shares and pocketed a cool $7.26 thanks to that dividend yield coming in at 3.47%, which by the way has been on the come up and growing on average by 23% year over year. Now, I didn't see another dividend paycheck actually come in until mid-month, but when I did, I certainly had bigger paydays. The next dividend paycheck came in from Realty Income, ticker symbol O, which allowed me to collect rent from their tenants as a real estate investment trust. Matter of fact, the largest REIT for net lease solutions in the industry with a portfolio totaling over 15,000 properties, scaling outside the United States at this point in time after covering all 50 states with their 1,000 plus clients, making for an insanely reliable monthly paying dividend company. However, with our current environment, the stock itself has actually slid into the red territory, well, really since 2020. As we can see here, it's 5-year window hovering in the red, though on the year we're trading for $53 per share. Yet think bigger picture here in a longer term, because we get over 100% share price appreciation with Realty Income over the last decade. And in my opinion, that's all Realty Income and other REITs alike really need, is a shift of gears into a lower interest rate environment to do what they do best: borrow money and grow their portfolios. As for analysts, they're forecasting the share price to actually climb up to $59.75 per share, at least in the near term. Now, in addition, we see some real confidence from hedge funds actually, as 924,000 shares were purchased by smart money last quarter. Now, my personal opinion, until our interest rate environment actually changes, I think Realty Income is a fine buy, but I'm personally focused elsewhere in my portfolio right now, so I'm just sitting on my 114 shares, which allowed me to receive $29.35 thanks to the dividend yield coming in at 5.91%, which is one of the higher yielding positions in my portfolio, with reliability after 55 years and continued growth on average by about 5% year over year. As for my next dividend paycheck, it was one of my largest on the month, but before I actually cover it, investors, help me just continue to help all of you by subscribing to the channel. It goes a long way in letting me know that we're on this journey together, that you're actually getting value from all of my videos. And at the end of the day, what's in it for you is a lot of dividend stock ideas and market insights from me. And while you're at it, tap on that thumbs up button, which just keys me into the fact that you are actually finding value in videos of mine, particularly this one. So it's a massive help. With that, we'll talk tech here with Apple, ticker symbol AAPL, which I don't think needs any sort of real introduction as a Mag 7 player, but this is all to say that Apple's currently trading for $194, up at a peak, so not necessarily a buy in my book, but if you're looking for a long-term tech player, perhaps that doesn't matter much, as we could see over 836% worth of appreciation with Apple over the last decade. And for all of you out there thinking that Apple is finished, finito, dying out, I say I truly believe as we progress into a very technologically oriented future, Apple will be there to continue to guide us and the industry forward. Moreover, I continue to appreciate Apple's approach to actually just thinking differently, as they say, with their tech across multiple verticals, specifically right now actually with their footing in healthcare. But notably, insiders and hedge funds are with me here on the sidelines, just saying to either sell or hold tight, with the most recent sell coming in at over $14 million from the director level. Nonetheless, I'm holding 128 shares. As one of the largest individual stock positions in my portfolio, I pocketed $32.20 from Apple thanks to the 0.52% dividend yield, which has been continuously experiencing growth, roughly 9% worth of it year over year. And while you're glued to your iPhone, Mac, or whatever other tech gadget you find an addiction in, just be sure to enjoy a Starbucks coffee along with it, as Starbucks, ticker symbol SBUX, was my final individual stock payment during the month of May. Now, very similarly to Darden and other fast food restaurants, Starbucks has not been performing so hot, from macros and just consumers realizing those luxury mocha chocolates just may be a bit much. Starbucks, however, has been altering their menu and improving their application experience, all announced just after their dreadful earnings not too long ago, which we can see Starbucks is currently down by almost 14% on the year, trading for just $82 per share. Heck, that's almost the price of just one of their coffees. Okay, not really, but on a serious note, while I don't like Starbucks coffee, I certainly do enjoy the fact that all of you do, and applaud the appreciation over the last decade of over 163% worth of appreciation, as Starbucks really just continues on their mission. And for one happy shareholder here, I collected $13.73 for owning 24 shares at this point in time, thanks to that dividend yield coming in at 2.78%, which has grown pretty nicely here by 17% year over year for the last 10 years. But now I also received money from having funds in a settlement fund with Vanguard, which I have been using quite like a savings account rather recently, to which I was paid $51.54, bringing my grand total on the month to $134.08. However, I really want to show you through all the momentum that we are gaining as this dividend snowball just continues to roll right along. So let's click into the dividend tracker. You can actually see that once we plug in the total, we had a stronger month of May than we did in April. But moreover, check out all of the growth from May of 2021 to now, about $100 difference just in the months of May. And then we get a monthly average income notching up here as well, coming on up to $73 this year. all the power of dividend investing. And now I just want to know how much money you actually brought in during the month of May from your dividends, if you outbeat me, or what exactly your game plan is to close out the year even stronger, or anything that you feel could actually help the masses of investors out there. Comment down below all of your thoughts. Be sure you're actually subscribed to the channel. And of course, right here is another video with more insights for you now.